This is your technical update from the LMAX Exchange Research and Analytics Desk for Friday, January 16th, 2015. So another low in the euro, with the market breaking down to now plus 10-year lows at 15.68 thus far. The next key support for the pair comes in at 13.75, which represents a low from November 2003. But at this point, it is worth noting that daily studies are well oversold, and there is the possibility for a corrective bounce. However, a lower top should be sought out somewhere in the 120 area ahead of a bearish resumption. Only back above the 50-day moving average would compromise the bearish outlook. Sterling dollar. Cable continues to extend its correction following the break to fresh 18-month lows at 50.35, but here too the downtrend remains firmly intact, and a lower top is sought out somewhere ahead of 54.85. in favor of a bearish resumption and move towards the 2013 low, which comes in at 48.15. Dollar yen. Dollar yen is broken down and is now back to close to retesting critical support, which comes in at 115.55 in the form of the 16th of December 2014 low. Inability to break below this level will keep the pressure on the top side and suggest the market is looking for a higher low ahead of the next major upside extension beyond the December 7-year high at 121.85 and towards 125 further up. But a break and close below 115.55 would delay bullish prospects and open the door for more significant declines before the market looks to resume the underlying bullish uptrend. Euro Swiss. Quite a day for Euro Swiss on Thursday, with the market dropping some 30%, and the market is now locked in within some consolidation in between the 97.10 and 106 area. We're looking at the hourly chart here given the extreme volatility, and a break back above 106 or below 97.10 is going to be required for the next clear directional bias in this market. Aussie dollar. Aussie is in the process of correcting a little bit following a breakdown that stalled just shy of critical psychological barriers at 80, but a lower top is now sought out somewhere ahead of 85.41 and ideally around the 83.84 area ahead of the next major downside extension below 80 and towards 75. Dollar CAD. Dollar CAD remains locked within a very well-defined uptrend, an intense uptrend that has taken the market to plus 5-year lows, trading through critical barriers at 120 and exposing further gains. However, with daily studies well overbought, there is the risk over the coming sessions that we do see a more significant correction in search of a fresh higher low before the market looks for a more significant bullish resumption. Kiwi dollar. Kiwi has been locked within a consolidation over the past several weeks and months, but the longer-term trend still favors the downside, and ultimately a break below the 2014 low at 76.09 is favored in favor of a fresh downside extension towards the 72 area. Only back above 80.35 would compromise the bearish outlook. S&P 500. The S&P 500 continues to show signs of a major top, with the market now approaching critical support in the form of the low from the 16th of December at 1968. A break and close below 1968 on Friday would open the door for an acceleration of declines that could take the market back towards the critical base that we saw several weeks back in October at 1850. Gold. Gold has recently broken out of some key resistance at 1256, with the market now focused on a potential retest of critical resistance further up at the 1345 area. The break of the 1256 level is now suggestive of a major base, and we could see these gains extend over the coming weeks, with the market now moving further away from those 4-year lows at 1131. That's all for today.